Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's April 26th. My friend Curzio, it's the Wall Street Unplugged podcast. So I break down headlines and tell you what's really moving these markets. So we just celebrated my 15-year anniversary, my wife, a few weeks ago. It's 15 years. We were talking about it yesterday. It's so amazing when I see people 30 years, 40 years, 50 years. And she was like, man, we know each other. We know each other for 20 years. With each other for 5 years before we got married. And she was like, wow, I can't believe it. One person for 20 years. And I was laughing. I said, to be honest, I felt like I dated 4 different people over that time when I was with you. When we first met, it was the let's have fun and do anything wife. And then it was, the responsibility wife, which we both became responsible and, building a home, getting our assets in order. Then, you go to the kid stage. So going from the wife to a mom where, the husband gets put in the back burner. No more attention for you. And now it's the kids growing up, more worrying about them as they get older and stuff like that. But it's different how, for both of us, we're joking around and stuff like that. But it's amazing how you change over the years in terms of, it's fun at the beginning, then you have the responsibility, then kids. And it seems like you get to that stage where during your kids and going to high school, it's pretty crazy. It's nuts. You're worrying. You're more stressed out than you've ever been, right? When you think maybe you should have been a little more stressed out earlier. Right, so when you're young, enjoy it. Have fun. Don't worry about crazy responsibilities and going nuts. And don't worry about if you got a D on your test or whatever. It's not a big deal. You never remember it at this age. Not a bit. Seriously. Just enjoy it because it gets more difficult as you get older. You're going to be more successful in your 30s and 40s. And again, you get married and you have kids and stuff like that. But, enjoy that process of just having fun and being responsible and joking around. And, you can lose money. You have plenty of earnings power. Learn as much as you can about the market, even do this podcast. But 15 years, really, really great stuff. Congratulations to myself for lasting that long. It's awesome. But my wife, it was really cool. So we're in the middle of earnings season here. And, man, we had Microsoft, Google, right? 2 powerhouses, trillion-dollar companies report. And I'm going to break them down. But if you look at earnings so far, and one of the biggest trends is we're all under this impression, we look at the Fed and inflation's coming down, and we see in New York State Empire Manufacturing Index, we see different things showing inflation. Let me tell you, inflation ain't coming down. I mean, not for the stuff that we pay for. And you see McDonald's? Do you see Pepsi, Coke, United Healthcare? United Healthcare just got a letter in the mail saying they're raising my prices for premiums for my company for 11% now, right? You've seen prices up tremendously. And they keep raising these prices, and they're reporting strong earnings. So they're able to pass, people are paying these prices and passing through the customers still, but you have the impression, wow, you're looking at certain indicators. But if you're on board where you think, hey, the Fed's pretty close to no longer raising, if the market stays up like this, and believe me, they look at the market all the time. That's how they dictate everything, by looking at the markets and that sentiment, engaging, and right now, things are pretty good, especially with the numbers from the big guys that reported so far. Again, I'll break them down in a minute. You look at Microsoft, Windows, commercial, huge price increases. See Chipotle, holy cow. They even say, we're raising prices while avocado prices and their costs have crashed. They're not lowering prices anytime soon. You have to think about that for companies because you're going to see inflation slow down and maybe get down to 2-3% level. That's after a lot of prices are up 20%, 30% over the past 3 years. And it's insane. But almost everything we pay for, we're not seeing that decline. Even energy prices, gasoline prices. We're not seeing that decline that you would expect. Wow, okay, these are easing our prices. There's so much liquidity in the system, and that's why people are like, the market's staying up so high. There's just so much, $11 trillion we injected to the system. There's still a lot of money sloshing around. But it's crazy just to see some of these earnings where estimates have been lowered, the bar's been lowered considerably, and they're beating, and they're saying, well, we raised prices last quarter. And they continue to do so. And they're getting, for now, they're getting them. But we're seeing trends through American Express, credit card companies, Walmart, especially middle-end consumers, low-end consumers are cutting back. Delinquency rates are going higher. People are paying their loans off in a longer period. Loan loss reserves for banks going high. We're seeing it. But this is really going to hit pretty hard. But those of you who expect, hey, the Fed, one more rate hike and we're done, it's going to be probably more than that. And those of you who are expecting that the Fed's going to be cutting, hey, good luck. They're not, unless the market absolutely crashes here, they're not cutting. They don't need to cut. Why cut? Earnings are good, sentiment's good, we're hanging in there. Why? Not to mention, unemployment still near historic lows, wage growth still growing at a slower pace, but still growing. These are signs that do not indicate that they have inflation under control. That's got to moderate even further. It's staying stubbornly high. You can see from the companies as well. But how could the Fed actually pause right now, which is crazy? I don't think they're going to pause. There's no need for them to pause. They might as well just overshoot and take it back later. And that was a big case for you to cut. You could say, hey, they're going to go to 5.5%, 6% and cut. But if they only go to 5, 5.25%, they're not going to cut as quick, right? I mean, that makes sense. So people don't talk about that. They just assume, well, they don't talk about the terminal rate went down considerably since all this banking garbage went on. And it's still going on. We're still seeing it. First Republic, holy shit. Down 50% yesterday. It was up today. Now it's down again. They're done. They're going to FDIC. They'll tap that window. Don't worry. They're going to say it's not taxpayer bailout or anything, even though the bank's going to be raising prices. They replenish the FDIC. Right, there's another one they're going to have to cover. It's happening right now. They're talking behind closed doors. And closed doors means they leak it to certain media outlets, which you all know. But that's a big theme here. The big theme is supposed to be, wow, the bar's set low and these companies are like, hey, we see. They're all warning of tougher environments, but they're still able to raise costs, especially on the consumer level, travel, things we pay for. And just to assume that, not even assume, all the home builders near all-time highs? Holy cow. Why? If you look at the Fed, why? Why are they going to stop? Why would they pause for? I think it'd be crazy to pause. Especially since they said their goal is to get inflation back down to 2%. And we're not even close to that, guys. We're more than double that still. It says indicators on both sides showing moderation. But the fact is, there's plenty of indicators like these companies and the pricing power and still raising prices here. It just shows you that the Fed, hey, if that's your catalyst, be careful. And even if it is your catalyst, we see throughout history, you go back past 50 years, go back 70 years, World War II. When a Fed reverses that tightening cycle, pauses, and then starts lowering, that's when the market really, really sells off. Because that's an indication that the economy is really slowing down and we need to start stimulating again. But the economy right now is chugging along okay with the Fed. Then I can't see them not raising. We have a quarter point hike coming. I think it's going to be at least another 2 quarter point hikes, at least. But let's see. Let's see what the data says, which is all over the place. But that's what I'm seeing from earnings so far. And then we have what? We have Google reporting. Massive. It's about 2%. Been going back and forth between up and down. They reported solid results, beat on both top and bottom line. And that's becoming a big player in AI. And I can tell you, when we hear AI, and I'll break down Microsoft and all the details, but when you hear AI, you think NVIDIA, you think Microsoft, and these major companies involved in this trend, which is all the major technology companies. But I have to tell you, out of all of them, Google is actually, going to become a big player in AI, but one of the companies seeing immediate results. Because everyone's like, well, AI, we're going to see those results. We're going to see those results. If you look at Microsoft, which is, however you want to pronounce it, Azure or whatever, with their cloud services, again, that's slowing down. But if you're looking at all the growth, which you're expecting, I think 26% growth next quarter, which is a significant slowdown. They reported 31%, which is a slowdown. It keeps slowing down, cloud. Across all the major companies, that growth is accelerating. But Microsoft said AI is going to account for just 1% of that growth. So very, very early in this trend, and it requires, just like EVs, massive, massive amounts of spending. So while these companies are cutting costs, they're raising their CapEx. And that's what Google's doing. That's what Microsoft's doing, because they got to get ahead of this trend, and they have the money to do it. But if you're looking at AI and immediate results, I mean, they have an AI platform for ads called PMax. It's generating 18% more conversions for ads. I mean, that's now. Good for them. Yeah, revenue returning to growth 2% year over year. The company wasn't growing the top line. It was better than expected. YouTube sales down just 3%. That's great for the company. YouTube sales were coming down tremendously, especially because short videos and TikToks have been taking market share, which they're still doing. And it fell 8% last quarter. But the biggest note I thought from Google, this is incredible. This is incredible. I tweeted about this at Frank Curzio, if you want to follow me. Alphabet's board approves a new $70 billion share repurchase authorization. $70 billion. Do you know how much that is? I know we throw around trillions and you don't really know. $70 billion. $70 billion is higher than the market cap of 400 of the 500 S&P companies in the S&P 500. So you could take that. And I don't know, $70 billion. I don't agree that $70 billion is the best use of that capital is to buy back your own stock. Maybe $30 billion. But you're looking at technology companies outside of the main big companies in the chip sector, the dominant companies, the four majors, the $1 trillion companies, a lot of them within cloud, within just Web3 have gotten annihilated. They have good technology. They've gotten annihilated because of their business models and it's growth, and no earnings, no cash flow yet coming in, and they've gotten annihilated. Man, you could acquire so many businesses right now. I mean, they ended the quarter with $115 billion in cash and cash equivalents, and they repurchased $59 billion of shares in 2022. I know Google didn't have a good 2022. Was that the best use of your capital? What happens if you didn't purchase those shares? But now you're going to $70 billion? I just think there's better ways to spend that capital. But that's going to, I don't know if it's going to put an actual floor under the stock, but, as it comes down, we're talking about a $1 trillion company. It definitely helps. It shows the growth in the balance sheet. However, the stock, even with these great results, even though AI, even though, again, they're into search. You look at Bing starting to take market share a little bit. Again, they're still a dominant player. The negative here is, when it comes to cloud. So when it comes to cloud, that growth is decelerating. Okay, we're seeing that across the board in big tech. CapEx is going to be much, much higher because they have to spend a shitload of money of AI and cloud infrastructure because massive investments. Margins lower. I think it's at 60, still amazing the margin, but it's the fourth lightest in the company's history. And again, seeing that slower growth of adoption in its main growth area, which is cloud. So you're going to see much higher spending, slower growth in cloud, which is going forward. This is the company talking. It means more cost cutting ahead. And I'm going to tell you, times are okay, but they have to position themselves with companies at this size. I mean, you have to go all in on AI. They went all in on cloud. It's benefiting, but you're seeing it. It's still growing. I'm not saying it's not a big, but you're seeing big deceleration in this. You're seeing this trend mature. And when it matures, you no longer have that huge high multiple. And that's what you have to be careful about. Because you look at Google, let's see, I'm going to look it up here. Just curious to see where it's trading now. Because you haven't seen it, the massive run up like you've seen it in Microsoft. Again, the stock's still well off its highs. It's it's up about 1-2% right now. But you're looking at a forward PE of 21, which isn't that bad. Because I can tell you, I'm pretty sure this is the cheapest of all the majors. Microsoft's trading at 30 times forward earnings right now. And this is after they reported those great numbers, those great earnings. Apple's trading close to that as well. 27 times forward earnings. They're going to report pretty soon. And you look at NVIDIA, 60 times forward earnings. They better beat. And as you're seeing, AI requires lots of spending. At least they're making the chips, right? It's not like we have to buy this technology, implement it throughout our whole entire system, which is what the majors are doing. They're the supplier of it, so they're getting money a lot quicker in that chain. But man, they better hope. They better hope that this is going to be big and huge because it's 6 times forward earnings. And it's massive. But Google right now is trading at the cheapest level out of all the majors. But this quarter was okay. It was good. Showed improvement. And the big takeaway is $70 billion. They're going to increase when it comes to authorization. But, good quarter, but a lot. Wait till I break down Microsoft. But you're going to see the importance of AI, and you want to hear both sides of the story, positive and negative. Not just, Google is great and Microsoft is great. And I'm going to break down Microsoft in 2 seconds. But first, quick note from our sponsor, who's Masterworks. Uses tokenization to disrupt the $1.7 trillion art industry. That's through their website, www.masterworks.com. Anyone could sign up and invest in a number of great, awesome paintings from legendary artists. You can do this by buying a small stake, which is tokenization. They have a secondary platform to trade these on, which is fascinating. So in other words, art industry is no longer an elite, super rich, famous person market. You can invest in these paintings, participate in their upside. It's an amazing platform, provides a way to diversify into an alternative asset class, which all of you should be doing with your money. And best of all, platform's free, very easy to set up an account. Once you sign up, you look at all the paintings listed on the site, choose whatever. You can go through. They have a whole educational segment, which is awesome. If you want to own a piece of one, you could actually do this on their site. Again, you can learn more at www.masterworks.com. That's www.masterworks.com. Now, let's get to Microsoft and Azure. Strong beat for Microsoft. People were worried. They raised guidance. $53 billion in sales for the quarter, but that's up 10%. That's very, very, very strong top-line growth in this market. You're not seeing that from companies. You're really not. Earnings also up about 10% from last year, year over year, and both beat consensus estimates. Execution-wise, Microsoft's doing a hell of a job. Cutting costs, seeing their margins go higher, at least for now, where Google's margins have come down. Now, you're hearing lots of positives. We're at the divisions, we're at LinkedIn, adding subscribers, everything chugging along. Almost, most of these divisions are growing. Some of them seem slower growth. And that's why you see Microsoft up 7%, pushing the whole NASDAQ up. Now trading closer to 300. But everything you say before, but is meaningless. Not in this case. I mean, listen, Microsoft did report a good quarter, but let's be fair. Okay, let's be fair. And I feel like sometimes people don't want to tell the full story. Because as someone that looks at the numbers, it's important. Because if you're buying Microsoft here, remember, you're buying it at its pretty much its most expensive valuation in probably 15, 20 years. So you better hope that they have incredible growth. And will they? Because there's some negatives that you should know if you're buying Microsoft today. For example, what's their biggest growth market? Obviously, cloud, Azure, which is slowing. I mean, it's decelerating. So it's not just from Microsoft. I mentioned Google, but you're seeing it across the board. Every company, Amazon, you're seeing it across the board. That's the reason why they're like, well, go all in on AI. It's the biggest trend, Bill Gates, the greatest trend we've ever seen ever. Oh my God, since the 80s or what. I mean, and you say, well, yeah, they're going in all in. How much all in? They mentioned AI 50 times on their call. 50 times. 50 times. Holy cow. You think they're going all in? They better. They have to. Because you look at Azure, it's growing at 31% year over year. You might be like, holy shit, that's a lot. But it's slowing down considerably. You're looking at, that's 7% decline sequentially. So when you say sequentially, that's from last quarter. Quarter over quarter, a 7% decline. That's huge. And next quarter, they're guiding it to grow just 26%. Of which AI, and I mentioned this earlier, only going to account for 1% of that 26% through their cloud division. So it just shows you how early the big guys, not the NVIDIAs, again, you got to pay for these chips and then making them, you have orders, and they're going to be able to book their revenue and earnings a lot quicker. These guys are getting this stuff and then implementing it across all their divisions, tons of divisions, hundreds of millions of people, right, throughout all of it. If it's Microsoft 360, the gaming platform, the cloud platform, enterprise, all across everything, right, and AI to make things easier. But if you look at the number that I feel like they're not mentioning, and this is the annual recurring revenue, it's down 16% year over year. That means their customers are spending less on cloud. That's the fourth straight quarter of declines. Now you know why. If you have a 30 times multiple and your biggest market is slowing down, you better find, especially at this size, you better find a market that's massive. And they have with AI. but it's going to require a ton of spending. That's why free cash flow is down 11% year over year. Again, something people aren't talking about. That easily missed expectations. Wasn't even close. CapEx. What are we seeing? What are we hearing out there? Oh, companies are cutting costs, especially technology. They're laying off employees. They're laying off employees, but CapEx is increasing across the board. You would think, all right, let's cut back. Like you look at Facebook, which is now Meta, they are cutting CapEx. They're one of the big majors that are cutting CapEx. Google's not. Apple's not going to either. But Microsoft expected to increase their CapEx considerably, not just next quarter, but going forward. That's going to be driven by investments in cloud and AI infrastructure, and that's okay. That's what CapEx is. Are you spending money on the future growth of your company, and that's great. But that results in less cash flow. You better hope this trend, you can make money off this. It's not like Ford saying we're going to spend $50 billion on new EV technology that we really don't have, and now you're seeing demand fall off a cliff for EVs. Prices come down. Margins are getting crushed. Again, before they can even realize anything, and they sold how many cars? Maybe 10,000 EVs so far, which is nothing. I think GM's quarter, which is pretty good. I think they said it was 20,000 EVs. But you're spending all this money, and now instead you're losing $3 billion they're losing on EVs. It's like the streaming business with Disney. It's all fun and games until you realize how much that shit costs. And now you're realizing, wow, this trend is slowing, and streaming is a very competitive environment, and we have to spend tens of billions of dollars that we really don't have because we spent too much on our Fox assets, and now you have the same thing in streaming. Okay, so massive capital up front, but when you look at EVs, you're like, whoa, it's kind of slowing down. It is. Not being adopted as quickly. You've seen all the estimates come down tremendously over the next 10, 20, 30 years of the projections. Tremendously. 60% of all fleets are going to be EVs. Now they're like 15, 20%. I mean, massive reductions in those estimates. And same, with streaming as well. You could add tons of subscribers. You could add 200, 300 million subscribers like Disney did, but they're going to be paying $3 each compared to Netflix at $15. Now you're spending a ton of money. You're losing it, right? So the good news about Microsoft, good news about Google when it comes to, they have the money to spend to really accelerate this trend, but it's going to be at a cost. And how long is it going to take for them to make that money? Because this is going to hurt margins. Margins are going to come down. Margins come down for Google. They didn't come down for Microsoft. They have a lot of consumer-related businesses. With Google, you have YouTube, but YouTube just be getting its ass kicked by TikTok, just like Instagram and every other social media company. But they have a lot of consumer-related business where they have pricing power, but you're going to probably see margins come down for Microsoft going forward. And again, you don't have much leverage there since you're trading at 30 times forward earnings. It is a staple. It is great. It's a place to hide if you want. The balance sheet's amazing, but again, you're paying a premium price for this company, assuming that everything's going to be okay. So my job is just to give you the full story because no one's really talking about that. And the biggest negative here is, the Competition and Markets Authority. Probably never heard of that. It's called the CMA, right? It's just basically, the Justice Department for the regulating United Kingdom. They just denied Microsoft's acquisition of Activision. And there's a big story behind this, guys, that Daniel and I are going to cover tomorrow. It's massive. Now, it's not like this is a game changer for Microsoft because it's so big and they're so diversified in other areas. It is going to hurt them a little bit, but this deal's not going through. And the reason why it's not going through amazes me. As someone that follows this and looks at acquisitions, and even back in Sirius Satellite and XM when they merged, I was one of the people saying they have to let this deal go through. And it's like, it's not going to go through, it's not going to go through. They were like, it's going to create a monopoly in satellite, but okay, fine. But that's just one outlet where you have radio, where you have iTunes, where you can plug in your phone and stream music, right, through Spotify. You have to include all those platforms. When you do, they don't have a monopoly. It's not like you have to buy satellite radio. You could choose to shut it off, and you're going to have plenty of other options, right? That's what it's about. Making sure it's fair, it's price or whatever, and you have to have concessions all the time when they do these deals just to show their strength, right? Because they can't be like, oh, you know what? That's a good deal. It's the government, right? They never do fucking anything easy, right? So they're always like, oh, okay, let me take a look at this. We'll get back to you in 2-3 months, which means 9 months. And then they're like, okay, well, for this deal, this is what you need to do. You need to sell this off. You need to provide that. And that's what they did for Microsoft. They said, if you're going to do Activision, here's some of the concessions, which are fine. That's normal in every single deal. One of those concessions were Call of Duty, one of their biggest franchises for Activision. They said, once Microsoft takes over Activision, you have to provide this to Nintendo for 10 years. And they said, fine, done, check. And there was other concessions. Again, they have the biggest legal department in the world, Microsoft. Like, everything's cool. So now this whole thing was about, the console market, and it's going to be, bigger, much, much bigger, where you have Sony, obviously, the biggest player in the console market. Then you have Microsoft, and it's going to be like two companies dominating. You have to be careful and stuff like that. And that was kind of the argument at first about this deal. That went away. They're like, all right, that's not a big deal. So the street thought that, okay, we're good here. United Kingdom's going to approve this. And all of a sudden, United Kingdom did something hilarious. They were like, we're not approving this. And it's not like, here's what we want for you to approve it, which is normal. They were like, we don't care what you do. I mean, they're basically telling Microsoft, if you want to sell your entire cloud division, you want to sell everything and just buy this, we're still not going to allow it. We don't give a shit, which is insane when you think about it. Because right now, they said that they're not going to approve it. And you know why? It was based on the negative implications on the cloud gaming segment, believing that Microsoft will be dominant in cloud gaming. The other leader in cloud gaming, it's a massively fragmented market where this does not move the needle. It does not move the needle. It doesn't prevent, this competitive threat to every other business. Like, oh my God, it's Activision or nothing. You play Call of Duty or nothing with the cloud. Are you out of your mind? I mean, it's a joke. That's what they said. So now the appeal process is even funny in the UK because, I don't know. I won't say they're a bunch of idiots. I'm saying the government is a bunch of idiots over there. But basically, when you appeal to the same exact people, the same regulatory body. So they're like, no. And you're like, okay, I'm going to appeal. And then you go up to them and they go, no, we said no. So there's no real appeal process here. This deal's not getting done. And you're seeing Activision sell off. This is a very, very big deal. And Daniel and I are going to break this down tomorrow on Wall Street Unplugged Premium. Because if you're looking at U.S. companies and the way they're going to grow in this market, especially if you have big balance sheets, it's not going to be by, sure, you could spend on the major trends. That's going to take a while. But the easiest way to grow in this type of market when you have cash is through acquisitions. And not only that, you could acquire companies that have gotten their ass kicked that are not as bigger than you because they're not run as well as Microsoft or Google. But now, how are you going to acquire companies when you have a government that's just saying no? Not that, hey, here's accession, here's what we need to see. No. We're just not going to approve it. Well, what are you talking about? Cloud gaming segment that wasn't even on the table. Well, now it is. I thought it was the consoles that you would consider. Nope. They're looking for a reason, and maybe it's a slap in the face to the U.S. I know if you're looking at the Inflation Reduction Act, Europe is extremely, extremely pissed at us because we cut them out completely out of the EV market with the credits of $7,500. I don't know if you know anything about cars, but the profit margins are a couple $1,000. A little bit more if you could raise prices. So they can't compete here. They were really pissed off. Because again, another place that we screwed, just like who else did we screw? The Saudis. In place to sell us oil to replenish our strategic oil reserve. And we were supposed to do that when oil prices came down to 75. They were there. They were down in the 60s in March, throughout March for a while. 3 weeks, we didn't do it. It's come back down. We're still not doing that. So what did they do? They said, okay, we're cutting production right in your face. Gave us the U.S. the finger. Said, F you, right in our face. And now this. Not approving it. I mean, it sounds similar, right? But the U.S. kind of did the same thing to crypto. I mean, you had 4 years, right? That the SEC said, we're going to provide this framework. They did provide zero framework for laws. Whatever. You could say everything, deem everything a security, deem it all a security. Just give us laws that you could follow. They didn't. They didn't give us laws. And not only did they not give us laws, they illegally shut down 2 crypto banks just to shut them down out of nowhere. They weren't doing anything illegal. There's no evidence of fraud. And shut them down and said, nope, no one's doing anything within crypto. I mean, these assholes didn't even give it a chance to understand this. It's $1 trillion market, guys. I mean, you look at generative AI is supposed to be, in 3 years, like $100 billion market in 3 years. This is $1 trillion market now that the rest of the world is going to steal and take from us with all the innovation going on because we don't want to regulate it. Why? Why don't we want to regulate? Why can't we regulate this industry? We know there's a lot of shit in it, just like there's shit in every single trend and major technology trend. When it first starts off and you have this mass adoption, everybody wants to get in. I mean, you have to see all the AI projects that get pitched. Hundreds of them. Everything's AI. Everything's AI. 90% of them are going to go to shit. That's what happens in these trends. So regulate it. Make sure people are protected. But there's innovation here, and it's an incredible market. It was a $3 trillion market. It's a massive market. And now China's like, hey, we'll take it. When you're looking at this, again, Daniel and I are going to break this down tomorrow. This de-dollarization thesis is real. Where right now, you have Russia, China, Brazil, Middle East, India, launching a coordinated effort to reduce their reliance on the US dollar. They're buying gold like crazy at central banks over the past 12 months, especially over the past 4 months, the highest rate in a half century. Look at the charts. Look it up. Start doing your research. This is something that people expected to happen 30 years, 40 years ago. Right now, it is different. Again, first is the Saudis giving us the finger, cutting production without worrying about the U.S. response, not being afraid at all. Now the EU denies a deal without having Microsoft provide concessions, just saying, hey, we're not doing it, doesn't matter. I mean, this never happens. You never really see that. Especially a deal this long that they had this long to look at. They would have gave it, like, this is a complete surprise. So Activision's getting nailed. Because everything else is checked off the box. People are following this. They go to the courts and say, okay, hey, you know what? It looks good. Microsoft's going to provide these concessions. You can see him is worried specifically about the console market, and there's nothing really there. Okay, now all of a sudden, out of nowhere, you just switch. Again, for the government to say, I don't care what you do, I'm not approving this, is extremely, extremely dangerous. And we are not talking about third world countries here. We're talking about the UK. We're talking about the US. Okay, we're talking about throughout Europe. Developed nations that don't do this are doing it now. If you're looking at this, it's a very, very big story. Again, it has to do with crypto as well, government crackdowns. But Daniel and I are going to break down all this tomorrow. Wall Street Unplugged Premium, much more detail. Give you a great way to play this massive de-dollarization trend, which we're seeing in very early stages, but very, very real. So I've been providing you research, actual research, not opinion, research, showing you the things that are going on that I've never seen before, that you've never seen before. So make no mistake, this trend is for real. Geopolitical tensions are going to get much, much worse in the months and years ahead. And it's going to have implications for your portfolio. You have to be positioned right. And if you're not, good luck. Because you're looking at there's gold, oil, Bitcoin, hard assets, commodities, things that are going on right now. Climate change. Why are we focusing so much on climate change when EVs actually hurt our environment more than gas cars? When you're looking at the mining process, this is fact. This isn't opinion. This is fact. So why are we pushing this so much as a solution to climate change when it's not? Now, I don't give a shit what side of the aisle you're on. Neither does Daniel. But trillions of dollars are going into these trends. And you need to be positioned. This way it helps you create generational wealth. Because major changes are coming. And these are stories we're uncovering. Wall Street Unplugged Premium again. This is where I show our research, share our research engines, which costs a lot of money. Also provide specific trading ideas based on the current news and earnings for Dallas Stock Club portfolio, that newsletter. Also providing exclusive interviews, high-profile guests within these trends that we talk about. And again, talk about topics with no bias, no agenda, just like we did with COVID. Telling you the real story, which is often controversial, because in this day and age, telling the truth is controversial, right? As crazy as that sounds. And more important than just research telling the story, we'll tell you how to position your portfolio and make money from it. Wall Street Unplugged Premium is just $10 a month. You can cancel anytime. And We'll be taping that tomorrow. Look forward to it. That's it for me, and I'll see you then. Take care.